Hello and welcome. I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we bring to you the lowdown of the day's action on Dalal Street. And Indian markets now today they have snapped their two-day losing run and ended about 1% higher in a highly volatile session where we saw a movement of about 300 points on Nifty. Now we started the day in the red with minor cuts and Nifty in fact even opened below the 21,200 mark. This was the lowest opening for the index since December of 2023. From there on, the market did try to stage a recovery, and we went on to test that 21,400 levels in the morning trade itself. However, the buying momentum that we were seeing in the opening trade fizzled out, and the market slipped in the red once again. But around that 1240, 1245 mark, bulls were back in the picture and they managed to take the markets higher till the end of the session, and in fact we closed very near to the day's high as well. And as you can see on your screen, at close Nifty ended about 1% higher, in fact over 1% at 21,454 mark, and about just 30 points shy of the day's high. Sensex on the other hand managed to add about 700 points in today's trade and ended above the 71,000 mark. And the index had moved in a broad range. Let's talk about volatility, because we saw 1,000-point movement on Sensex. We went as low as 70,000 and actually the day's low was at 70,001 levels, and we ended above the 71,000 mark. So you can make from that the volatility was pretty high. But the good thing is that we ended near the day's high. Sensex also ended about just 90 points shy of the intraday high today. So good bit of a strength we have seen in the markets building today. The broader markets have also made a strong comeback. Yesterday, remember, they fell somewhere close to the 3% mark. Both indices, the small cap and the mid cap indices, were down about 3%. Today we are seeing almost a 2% rally. Mid cap index at in today's session was up about 1.83%. That closed above the 47,400 mark. In fact, we in the morning trade we had in fact slipped below the 47,000 mark as well. But again, good bit of recovery, and all segments of the markets also participated in that recovery. The small cap index, as you can see, also managed to post significant gains. It was up about 1.72% at close, and it closed above the 15,300 marks. Another factor that perhaps the bulls will celebrate is a fall in volatility. India VIX declined by about 3%, and we were when we started the day we were just under the 14 mark. We went on to rescale the 15 sort of levels, which historically speaking is high level of volatility as far as India VIX is concerned. And from there on we saw a slip and we ended just about at 14.38 sort of levels. And moving on to the sectors, all sectors ended today's session in the green except your Nifty Private Bank. Now that ended about marginally lower, just down about 0.24%, but as you can see, all other sectors participated, led by your IT pack, which was up about 1.7%. Auto pack also staged a good bit of rally. It was up about 1.27%. FMCG pack, now that rallied by about 1.6%, and it was one of the best performing sectors in unison with the PSU Bank, which gained about 2%. And your pharma space, now that has in fact scaled a new record high. It ended about 1.4% higher, and in the market movement of the last 3-4 session, I think that was the only segment of the market that was providing some bit of a stability when the markets were quite choppy rather. But to discuss what's going on and to get a broader view, let's also bring on board Mr. Kranti Bhatini of Wealth Mill Securities. Thank you for joining us here on Last Tick, Kranti. Always a pleasure speaking to you. What's your overall assessment of the markets? Just a couple of weeks ago, we saw a 500-point rally after the IT pack results came out. Then we declined about 600 points. Big fall yesterday, 1.5%. The markets were down. Today, it's up 1% or so. So what are you making of this sharp volatility that we have seen play out in the markets in the last few days?
That's what we can witness in the market if we analyze the data. It is giving by and large a range bound market right now. We can see the upside is capped in the near term, and the downside also capped in the near term. So markets have been trending in the range of 21,500 to 22,000. This is the range we can see in the market in the near term. So whenever the market going below this 21,500 below bottom end, we can see some ferocious buying is emerging. On the top, any negative news or irrespective of the reason, on the top market is what we are witnessing is some kind of profit booking is invariably coming. The what we can say the reasons are different, but we can see at the top of the market, we can see that there is a good amount of profit booking also is coming. But one thing is clear, it's very clearly evident in the market is Indian market definitely it's a buy and dips market, and sometimes investors whenever there is a excess that get built up in particular stocks, okay, better to take profits from the table. That also crucial in these kind of market. Overall, markets are trending in a range bound market in a medium to short term perspective.
All right, quite a broad range there from a medium term perspective, and I think one of the pockets of market is the banking pack. Now that has been a big laggard for us. In fact, Nifty Bank and the banking stocks in general, they hold about a 35-36% weightage, and that has been a drag on Nifty as well. What's your view there? Because the numbers, from what I understand, they were good. NIMS as expected was from the brokerage's view and your view as well, NIMS was expected to remain under pressure, and it is going to remain under pressure for at least for the next couple of quarters. So what is weighing on the entire pack?
The main reasons, Yash, if we have to analyze the bank index, the bellwether and the the big boy HDFC is not giving the support. In fact, it's creating extra pressure on the entire banking space. So when a big bank with a highest market capitalization and also with a market share with respect to all the financial products are concerned, when the big boy is struggling, that's going to create a ripple effect on the other the banking stocks also. That's what we have been witnessing in the market. But what we need to see is market is too much anticipating from HDFC Bank. The results are okay, but the issue here is the anticipation of the market from HDFC Bank is too much because it's taking time. The merger yields have been yet to manifest for HDFC Bank. Most probably it might take some more time, couple of quarters time. So that's where the market has been punishing HDFC Bank, and the selling pressure is emerging in HDFC Bank. And the FIs have been the net sellers in HDFC Bank throughout these trading days. So that's where the extra pressure is coming with respect to the entire bank index is concerned.
All right, and specifically speaking on the HDFC Bank stock, that is at a 52-week low. We are somewhere around the 1450 mark. In fact, after the merger announcement, we saw a consolidation in the range of 1450 to 1520, and we are back in that range. So would you personally be a buyer in HDFC Bank at this current price point?
One thing, Suyash, I need to check if I have the patience or not. If I have the patience, definitely I'll buy. If I don't have the patience, I can see some kind of momentum stocks because the problem is we tend to compare with the peer group or we tend to compare with the other best performing momentum stock in the market. When on the other hand, the railway stocks have been going, they are flying. In fact, they're not on track, they are flying. A bank like HDFC Bank is not at all moving. So if I tend to compare, okay, get disappointed and I lose my patience, okay. But coming to the point, okay, see the performance of HDFC Bank for 10, 15 years, one of the outstanding bank, and in all the performance parameters have been outstanding and phenomenal. When there is a big event, that is the merger of HDFC Bank and HDFC Limited, okay, it takes time to get the yields, the outcomes. It might take. Okay, we can't bang on the bank for every quarter to deliver what they were doing last 10, 15 years. So the expectation is high. It's weighing high on the bank. That is the reason we can see some kind of underperformance in the medium to short term. But definitely for a long-term perspective, definitely it's buy on dips. Since, as you mentioned, it is in the 52-week low. If the investor have a patience to hold up, definitely they can buy. And the one thing is, people need to, the valuations are attractive, and people need to have a vision to see how the bank is going to emerge over a period of time, and patience is crucial. That's where everybody mulling.
All right, and as we speak, the numbers of Tech Mahindra have come out, and they seem rather disappointing. They have missed streets expectations on the account of profitability and revenue, and margin is essentially pretty much in line with what the street was expecting. As you can see on your screen, the revenue figure is essentially flat on a quarter-on-quarter basis. That comes in at 13,100 crore mark for Q3 FY24 versus 12,864 in the year ago period. Net profit has also seen a marginal, very small rise from 505 crore in the year ago to 510 crore now. EBITDA, now that has declined. I think a lot of the brokerages were expecting a big pickup in EBITDA, the operating profit, given that because of the operational efficiencies of the company, but that has in fact seen a decline on a quarter-on-quarter basis of about 0.34%. That figure comes in at around 703 crore for the December quarter versus 1072 crore in the year ago. And margins, now they have declined substantially. I think that's about 2.9%, 290 basis point decline. Kranti, coming to you, Tech Mahindra stock has done fairly well. I was just looking at the price charts. In the last 6 months, it's up about 22%. Today also it rallied about 3% or so. So, initial thoughts on the result and on the stock as well.
Suresh, as you mentioned, the stock has performed well, and it was needed to, it touched 52-week high also in terms of the price action is concerned. Coming to the results, okay, what the expectation is low with respect to Tech Mahindra is concerned. As per the expectation only, the revenues are flattish, but the tech stocks are concerned, Nashia. What we need to see is the management commentary, how their customers are behaving, and how the coming future order book and the margins. This is extremely crucial. Management commentary is extremely important for all these, by and large, the large cap or mid cap tech companies are concerned. So management commentary, we need to wait and watch it before concluding on the results. But what we can see with respect to the price action is concerned, the stocks have made a bottom, and now they are in the positive zone at the current moment. What we need to see is next couple of quarters results are extremely crucial. Names like Tech Mahindra at this point of time.
All right, and we have pretty much have seen the results of the major 5 IT companies: Infosys, TCS, HCL Tech, Wipro, etc. What would be your pecking order, sir, after the Q3 print?
Yeah, now the pecking order remains same, yes, but right now, if these stocks are buy and dip stocks, there is no hurry to jump and buy these stocks right now. The order that remains the same: Infosys and TCS and HCL Technologies. Investors need to, they can change this order as per the risk appetite is concerned. So the order remains the same at this point of time, but one need to have a little bit patience at this point of time to get into the stock, because these stocks have what we witnessed is a sharp vertical moves in the stocks in recent weeks time. Okay, so one need to buy at dips rather than buying in a single lump sum go. One can buy these stocks in a staggered manner.
All right, buy on dips as far as IT stocks are concerned, because as you rightly pointed out, sir, they have seen quite a bit of a surge in the last couple of weeks. Has been one of the best performing sectors, in fact. But as always, sir, great insights from you. Thank you for joining us here on News9.
Thank you, Suresh. Always my pleasure to share my views with you and with all the viewers.
Thank you. But that's all we have in this edition of Last Tick. But stay tuned with us as we'll be right back with Business Plus on the other side.
जब हम करेंगे तो पता लग ही जाएगा. सलमान खान का करेंगे, मारेंगे यहीं जोधपुर में मारेंगे तो पता लग जाएगा.
This is someone who is sitting inside our jails and is still very obviously and openly running, and possibly the largest organized criminal operation in the country.
Student organization of Punjab University में सोपूगा acting president type भी रहा है.
He was a troublemaker, getting into fights with people, not coming to the class.
As on date, it appears that Lawrence gang is the most important, the prominent gang. Gangs here in Punjab, they are intimidated.
Today he is India's most dangerous gangster, and India's presence are apparent.